Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, Steve Taylor, CEO of BlueRush. Steve, the floor is yours.
Thank you. Thanks for the intro. Hi, Steve Taylor from BlueRush. I'm just getting used to this portal here, so apologies. But I've got a half an hour with you to talk about our company. So BlueRush is we have an interactive personalized video platform. I'm going to talk a lot more about what that means, but I'm going to start with the problem that we solve as a company, which really is the increasingly difficult challenge of engaging customers in the digital channels. We work with a lot of leading financial services entities in the banking, insurance, wealth management, pension fund management sector, now pushing out into verticals such as telco, utilities, and regardless of the customers we're working with, this is one of the biggest problems that they have. And we know that COVID changed a lot of things, and it did in this case. It made it even harder for companies to engage in the digital channel. But the real challenge is not just getting somebody's attention. The real challenge is getting somebody's attention, keeping that attention, and creating a meaningful dialogue with that person. And here's how we do it. So our platform is called IndiVideo. I'm going to show you some examples. They're going to be static examples, but certainly I can send some URL links after the presentation. But basically, this is what it is. It's video, but what we can do is we can inject names, numbers, interactivity, calls to action. Really anything you could do in the context of a website, we could actually do in a video. And video is the most engaging medium. We know that, especially when you get into younger age groups, Gen Z, millennials, and actually older age groups are starting to prefer video now just for the convenience factor. And when it comes to financial products, the benefit of having something explained to them, having something made simple for them. I'll just give you a brief timeline on Resolver, or BlueRush, sorry. I was going to talk about Resolver. That's my last company. So BlueRush has been around actually for 15 years. And I met the management team in 2017. The company had been operating as a digital agency up to that point, but they had built this wonderful technology, IndiVideo, which I completely fell in love with. Some partners of mine and I did some evaluation on the space, really liked the potential of the space for dynamic video, and so we put some of our own money in, we raised a bit of money, and we went about turning this digital agency into a software as a services company. We've recently passed 3 million of committed ARR. You can see just a small sampling of the types of clients that we've been really lucky enough to begin to work with here. And we've gone from a small Canadian company, really with Canadian-only clients, to a global footprint with clients in South America and Europe and obviously United States, and even as far reaching as Southeast Asia, where we have a couple of big insurance clients. So we made a lot of progress since late 2018 when we got going here. This is you can find a lot of these kind of stats, but on the left-hand side you really see some of the ideas about what the expectation is of consumers. Okay, so when you get somebody's attention, it's just not enough to give them a generic message that says, you know, hey, you should find out more about our credit cards. Messaging needs to be tailored. It needs to be relevant. Some of these stats are not new, by the way, but there are, you can get stats from as early as last week just suggesting that it's really important for brands to have a contextual, relevant message. At the same time, what we're seeing, and the reason our company is growing, honestly, is that this works. Whatever metric you want to explore, whether it's email open rates or engagement rates with the videos, performance of websites, direct marketing campaigns, whatever it might be, we see big lifts for our customers across the board. And here's some examples. So, and you can see here, like, this is almost unheard of, but 96% email open rate. Typically, you'll see anywhere from a 10 to 40% increase in an email open rate. Once people view the videos, they are more likely to convert. So you can see here this 40% conversion metrics. The third metric here in the third column is an important one as well. That people love being communicated to this way, and so our customers create surveys, and the surveys come back, and people say, this is amazing. There's one thing in here too to note where it says 70% of visitors stay beyond the first 60 seconds, and you'll see that at a couple of places in here. Excuse me. That is part of the magic of this technology. We can get somebody's attention with these personalized videos for 60, 70, 80, 90 seconds. And that's long enough to tell a story. It's long enough to explain a product, build some trust, and that trust becomes the foundation for that customer to take an action. We often say, sometimes we use the 3 E's: engage, educate, and empower. And it is engaging. Once we engage them, we can educate them, and then they feel empowered to take an action. You can see here, here's where we got going in 2018. We had literally no recurring revenue on the IndiVideo platform. We sold our first real contract in fall of 2018. That's when the subscription revenue began. And you can see, we started climbing the ladder. The last couple of years, we've added roughly $1 million of ARR each year, and this year we feel like really is a breakthrough year for us in terms of growth, and that's why we're sort of projecting this kind of accelerated growth in 2015 and 2022, and that's a really a function of the types of customers we have, and I'll talk more about that. The partner network that we've grown over these past 4 years. You can see just recently, this is our recognized SaaS revenue grew 55%. Committed ARR, this is as of year end, which was for us is kind of a weird year end we have in July. And nice growth there as well. The gross margins continue to grow. One of the things I love about this business, and I'll get into how we actually render our videos, but we have an extremely low cost model to deliver. And these gross margins are only going to climb as we scale up. If you invest in, own, run SaaS businesses, this 90% at the bottom is a critical metric. All this growth doesn't matter if you're losing a bunch of your clients. And again, because I would say a combination of the fact that we're getting such great results for our clients, and also the fact that we really do give them a white glove treatment. We also have partners that treat their clients the same way, and I think the combination of our customer service and the results are what are really driving the retention rate. These are some highlights from our press release that came out recently, and you can see again here, and I apologize for the small type, the 55%. We're closing in as of the end of the year. We're closing in on 2.6. We had some subsequent disclosure around Q1 that we haven't actually released Q1, but we've got some subsequent disclosure we put out that puts us up past 3 million. which is a really, really exciting milestone. And really, if you think about it, from October 2018 is when we booked our first contract. So it's really in 3 years, and we're quite proud of that. Low churn, everything that I talked about, I think mostly in the past slide, it's covered here with a little bit more detail. One that it wasn't in the last slide though is interesting is that from a financial perspective, the thing that grew the most, and I understand these are small numbers, everybody, but again, this is early stage SaaS, but you can see the lift in the actual gross profit generated by the SaaS business here from 900,000 to 1.6 in the fourth bullet, and that's significant. And as I said, our technology delivers video in a way that uses very little technical resources, and as a result, our gross margins are great. And so here you're starting to see it actually translate into money coming into the business. And again, I've started and built up and sold several SaaS companies in my career. 3 million in 3 years is fantastic. These gross margin numbers are something you can really build a big business around, especially with these kind of retention rates. So very kind of healthy across the board in terms of what's going on. This is what we booked in new. This was as of this press release. We booked an additional 600,000 of ARR since year end, and so most of that in Q1. Which is 70% of what we booked all of last year. So we're really, when I say we're kind of hitting a point in time here where things are starting to take off, that's a number to take a good look at. Again, we've signed 2 more of the largest banks in North America. I measure that by assets under management. Another top 5 insurance provider. We signed our first utility customer in the quarter, which is one of the largest utilities in the United States. There's a massive opportunity for us around utilities and statements. And then a lot of our incremental revenues coming from growing our customers as well. So this is a really exciting kind of start to the year, to be honest. And this part here, excuse me, at the bottom, this is critical to understand. Like what we're really good at doing is we secure these larger clients, and then we have a ability to grow those clients. This is the slide I have to put in there saying that our stock is grossly undervalued and should be purchased immediately. This is the best we can do in terms of finding sampling. You can see actually that, and I apologize, I didn't mean to seem flippant there. There's a range here of valuations. We are currently at the low end of that range, and I think given all the qualitative factors that I'm outlining for you here, I think hopefully you'd agree that maybe we should not be at the low end of that range. But there is, to me, there's some arbitrage built in right now to the stock just based on our valuation relative to our peer group. If we were private, we'd probably be trading at about 4 times what we're trading at now. So this is just a sampling of the types of customers we've been able to secure in the early years here. Again, you can see these are cream of the crop type companies. They're spread between the United States, South America, Canada. Obviously, we have some great clients up here in Canada where it all started. And that really does it gives us a foundation for growth. You can kind of see with some of our customers here in terms of ARR, we've been able to grow these accounts significantly. And State Farm, that's about a 2.5-year time frame. Pentegra about 2 years. TD US probably also 2 years. So you can see, basically in terms of our total ARR amount, we can more than double just by continuing to grow these accounts. We had some exciting new logos come in Q1. We had some very exciting logos come into the funnel in Q1. And then we've had expansion revenue with some of our wonderful customers. Let's just check the. Okay, I have one question which I will get back to. So this is this slide here will give you an idea of how we sell. So we are, for a company at our stage, we have a very aggressive approach to partners. We have, I mentioned South America, so we have 3 pension funds in South America, 3 banks, and I think we might have just got our first telco client down there as well, and that's all through a partner. If you look at our recent announcements with companies like Quadient, Crawford, Doxum, all of these companies are in the customer communications management space, and that means what they handle primarily are statements and bills. And this is a wonderful place for our technology to live, is around a statement, helping somebody just understand why did my utility bill change this month? What could I do to lower my bill? Explaining credit card details. We're supporting some of these customers in the wealth management domain, so somebody can get a monthly or a quarterly portfolio summary. The wealth advisors love this stuff. It's a great way for them to have a touch point with their customer. So we have a growing network of partners. We have an excellent set of customers, all of whom are growing, as I was sort of showing you on the last slide. And then we do, obviously, we're still going out to get new logo customers as well. Being mindful of time here, so 20 after. This just gives you an idea. Like we started up here in Canada. We moved into the U.S., into South America, Europe, and nice combination of, in some cases, customers, in some cases, some new partners that are just getting going for us. But definitely exciting times. So, from a platform perspective, why are we winning? We have a very, try to explain this as simply as possible. So typically when you make a video, you create a file and you send a file. We don't do that. Nothing happens for us until somebody clicks a button on their phone, in their browser, where it could be in an app, wherever it is. At that point, we send the payload, we send the data, the content, everything required to then assemble the video, and we use the device, the resources of the device to do that. So that means that our costs are much lower. That's why our costs are much lower. So I'm not paying Microsoft Azure to process millions of videos. I'm literally only sending pretty much data and light files, content in the form of light files. And this has given us a huge pricing advantage over our competitors. It means we can support huge use cases, and we do have larger and larger use cases coming our way. Also, part of the genius of the platform is that we never have to touch personalized data. So when we're working with these big banks, we don't take all that PII or personally identifiable information over to our servers, which would dramatically lengthen sales cycles or I would say, negate a large number of deals if we had to do that. We do provide full campaign support for our customers, and we have a robust analytics package as well. I've got actually my new VP sales. We got to get his picture in there, but got a great management team. As I mentioned, I've been doing this a while. Resolver, the company I started in 2002, sold in 2015. I honestly think was one of the first SaaS companies in Canada in the early 2000s. There was no term SaaS. It wasn't even called that then, but that's what we built. And, I know how to put a nice management team together. Larry and Len are actually founders. They were part of the agency business. They become important contributors to the new model. Jeff Lieberman, we brought in about 6 months ago, and he's really hit the ground running and is already a part of some of the success that we've been enjoying in the beginning of the year. Nicole, great CFO, and Rich, my CTO, is total genius. All of our technical resources are down in Montreal, actually. So we do have the market we're in is unlimited, and it's not going anywhere. Really, this customer engagement problem is an epidemic problem, and it's only getting worse as time goes on and harder as the digital channels get noisier. Video is the fastest growing medium on the internet. That's an automatic tailwind for a business like this, and there are not a lot of ways to actually, as an investor, take advantage of all of the growth and activity that's going on in the video sector. So we do represent, I think, a unique opportunity for you in that respect. There's companies growing. There's companies raising literally hundreds of millions of dollars, private companies right now in the space. So we got a great management team. We've got I think a great strategy in terms of going to market, in terms of the three approaches that I mentioned, and we've built a base here that we can build on. I think this is the important thing. Like, again, the sort of 0 to 3 million in the SaaS world is really the kind of the nasty part. It's really hard to get your first customers, especially this technology. It was really not understood by most of the companies that we're talking to, so very evangelical. I'll give you a couple of just more specific examples, and this one says do not share externally, but so that's been done already. I actually think that's an old note, and we're okay with this one. But you can see here 95% watch 75% of the video, 29% lift in actual people converting to using an app. Okay, like that's a huge conversion number, and moving people away from paper. So there's additional savings in there, and a 13% lift in people signing up for auto pay, which is a great result, obviously, for them because they don't have to chase people for money. This is a different insurance provider. You can see here a 30% activity rate on downloading an app, 95% viewers remaining engaged, watching 75% of the video. That is, these are the types of numbers that we just keep getting with our customers. And with some of these screen shares, you kind of get an idea of, what we're doing, and you just kind of see here, right away when you put somebody's name in there, it makes a huge difference. So I do have a question here, and I would encourage any questions anybody might have. We've got about 5 minutes left, and certainly willing to have conversations after the fact as well. Vision for the company in the next 12 months is a great question. To some extent, the answer is more of the same. We've proven that we can get new customers, so we're going to keep doing that. We've proven that we can grow those customers. We're going to keep doing that. And we've proven that we can establish partners and that those partners can sell on our behalf as well. And so, in a way, not much changes. We're innovating all the time with the technology. We have some very exciting new releases coming up that are going to help us push more into the sales part of the organization and helping salespeople with personalized videos, self-recorded personalized videos, helping them share content. I think that's going to be a big part of it. But and it's a bit of a double down on the partner element of the strategy. But other than that, everything you just saw, that's what we're doing, and that's what we're going to continue to do. So yeah, that's my presentation. So if there are no more questions, then I can keep showing. I've got 2 more minutes to keep showing you stats like 129% increase in email open rates. So, but I think you get the idea. It's probably worth going to our website, or as I say, I'd be happy to do like a Zoom call to show you some of these videos, and it really kind of helps bring it home when you see them live and in action. And a lot of times people don't really have the aha moment until they've seen a couple of them. But again, I've timed a few businesses as well. I was one of the first. I was part of one of the first companies building e-commerce sites in the 90s when nobody thought anybody was going to buy anything on the internet. And when I started Resolver, there was really no space around compliance management. Everybody was just using Excel. I have helped start a mobile marketing company, early text to win, more from the board of directors on that one. And again, I hadn't even sent a text when I joined the board of that one. And, I've been sort of maybe a little bit lucky, a little bit smart with timing. And this one is beautifully timed. Like the market is really coming around to this. It's becoming less evangelical. It's more of a tailwind than a headwind when we get up every day and go do our thing. So I'm very excited to be part of it, and we would love to have you as shareholders. So hopefully this helped you understand our business. And as I say, please feel free to reach out if you want to dig deeper.